How's it going today, guys? Welcome to Stock Market for Beginners, a series on investing for beginners. I'm very excited to bring this to you. I've been planning this for a couple of weeks now. I've been getting a lot of questions from people asking some very basic things about investing, and I know I've probably answered these questions at some point in time over the last year and a half of making YouTube videos, but maybe they've been buried among the hundreds of videos out there, or they're not well organized, so I decided I want to start from the beginning and create a series for complete beginners when it comes to investing in the stock market, and that is what we have here. We're calling it Stock Market for Beginners, a series on investing for beginners. So first of all, let's go ahead and talk about where we are heading with this series on investing. These are the first 16 lectures, and there's going to be more after that, but if you guys have any specific questions about investing as a beginner that you want me to answer, make sure you drop those in the comments section below. But first of all, we're going to cover what is a stock today. Then we're going to talk about how to make money with stocks, how to buy and sell stocks. Then we're going to go over how much do you need to start investing for the first time. After that, we're going to talk about what to do if you have high interest debt, should you start investing or pay off your debt first. Then we're going to go over some basic investing terms and trade lingo. Then we're going to talk about setting up a brokerage account, whether you want a margin versus a cash account. Then we're going to go over some basic stock market order types when you're buying and selling stocks. Then we're going to cover bull versus bear market. What is market capitalization? What is a market index? Expensive versus cheap stocks. How to tell if a stock is expensive or cheap. And I'll give you a hint, it has nothing to do with the share price. Then we're going to talk about company earnings and the price to earnings ratio. Analyzing stock tables, what is a dividend, and then the best stocks for beginners. And like I said, I have many other topics. I think I have like 35 so far. This is just going to be the first 16. And comment below if you guys have any other segments you want me to add to this series. But we're going to get started here by talking about the very basics, which is what is a stock. So a stock is a share in the ownership of a company, and as a shareholder, you are a part owner. A lot of people forget this when they're going out and buying stock or buying shares on the market, and they're trading them left and right, and they're buying and selling. You forget that you actually are owning a piece of a company, and a lot of people need to keep that in mind when they are investing, especially as a long-term investor. When you're investing in a company for the long term, you're a part owner of that company, and you should have some pride of ownership. A lot of people who are just buying and selling stocks without really thinking about what they're investing in don't really remind themselves that they are a part owner of that company, and they definitely don't have that pride of ownership, and that is something that can really help you ride out some tough times with that company if there is some short-term turbulence with that stock or some kind of a correction. If you're proud to own that company, you're not going to be tempted to sell it. But if you don't care about that company and you don't consider yourself to be a proud owner, then you're going to be selling that company as soon as you have the chance to, whether it's a good time to sell or not. So always keep in mind that as a shareholder, you own a piece of that company, even if it is just a small piece. So why does a company issue stock? They do this as a way to raise money. So as corporations grow, they need a way to raise capital, and one option is the IPO, or the initial public offering, and we're going to talk about that later on in this series. And then down the road, if the company wants to, as a means to raise more capital, they can issue more shares, which is going to increase these shares outstanding. And shares outstanding is the total number of shares of that company available to both private and public entities. It's the total number of shares out there of that company. And what happens as they issue more shares is the stock becomes more diluted and there are more shares outstanding. So typically speaking, you don't want to be seeing companies issuing more shares. It's going to make your ownership stake more diluted. Now, as a shareholder, you own a percentage of the company assets and have a right to some of the company earnings. Now, how much are they going to pay the shareholders? That is up to the company to decide. They make the decision at the end of the day how much of the earnings they want to reinvest into the business, how much they want to pay their management team and their employees, and then how much of the earnings they want to pass along to the shareholders. And then obviously, if a company is not turning a profit, they do not have any earnings and they will not be passing any earnings along to the shareholders. And when companies are sharing earnings, it is in the form of a dividend. Again, we're going to talk about a dividend later on in this series. So one thing that is interesting about being a part owner of a company is that as a shareholder, you may have voting rights depending on the class of shares purchased. And we're going to discuss this later on. But certain shares of a stock may entitle you to have voting rights where you can vote in major company decisions. And your question may be, how much of a say do you really have in these company decisions? Well, the weight your vote carries corresponds with the ownership stake you have in that company, and we're going to talk about this more when we cover voting shares, but I'm going to give you a brief example comparing a small Coca-Cola investor to Warren Buffett, a very large Coca-Cola investor. Now, a lot of people do not exercise their right to vote on company decisions, and I guess this is similar to people who don't vote in politics or local politics. The way I see it is, if you have a right to vote, you might as well exercise that right. I always vote on company decisions, but some people argue that I have no idea who these people are. I don't know the board of directors. Why should I be voting? I'll let other people do it. That, again, is going to be up to your discretion whether or not you want to exercise your right to vote if you do have voting shares. So looking at Coca-Cola, Coca-Cola has approximately 4.26 billion shares outstanding. There are 4.26 billion shares of Coca-Cola stock. So if you owned 1,000 shares of Coca-Cola, your ownership stake would be 0.000023%. So let's compare that to Warren Buffett. So Warren Buffett owns 400 million shares of Coca-Cola. He has owned these shares for many decades, so his ownership stake is around 9.3%. So Warren Buffett would have more voting power than you do simply because he owns more of the company and he has a larger stake in the company. Therefore, he has more voting rights and his word carries more weight than yours. So now we are moving into the types of stock. Most people are not even aware that there are different types of stock, and it really is nothing you need to know, but I just figured we'd cover it here for curiosity purposes. We're going to talk about the difference between common stock and preferred stock. So common stock is the kind of stock that most investors are buying, and common stock typically entitles you to 1 vote per share, assuming that company has issued voting rights. Now there are companies out there, for example Snapchat, that offer non-voting shares to the public, and that is something we're going to talk about later on when we talk about voting rights as a shareholder. And common stockholders may also be entitled to dividend payments as well. If that company is turning a profit and they have earnings and they decide to pass them down to the shareholders, they may do so in the form of quarterly dividend payments. Now, preferred stock, on the other hand, is less common as it is not typically traded on an exchange, and preferred stockholders usually do not have any voting rights. So the big question is, why would you want to be a preferred stockholder? It is because preferred stockholders take priority over common stockholders when it comes to dividends and bankruptcy. So if a company is paying dividends, they may pay a higher rate to preferred stockholders, or they may pay them first, and if the company goes bankrupt and they are selling off the assets, then preferred stockholders are going to be getting their money before common stockholders do. And finally, I just want to go over a shareholder example talking about company earnings as well as bankruptcy. So first, let's cover company earnings. Let's say you own 1,000 shares of a company and the company has 10,000 shares outstanding. So you own 10% of this company. You are a 10% owner of whatever this small company is. Now, let's say the company is profitable and they paid out $20,000 to shareholders, then you would have rights to 10% of that, or $2,000. That is what you would get as far as the company earnings go. Now, on the other hand, let's talk about bankruptcy. Let's say you own 1,000 shares of a company. The company has 10,000 shares outstanding. They're all common stock. There's no preferred stock, and as a result, you own 10% of this company, and you would be entitled to 10% of the assets upon liquidation. So if the company goes bankrupt and sells off all the assets for $5,000, you would get 10% or $500. Now, there are other scenarios that would apply, especially if a company is going bankrupt. If they have bondholders, or like we said, preferred stockholders, are going to take priority over you. But hopefully you're never in a situation where you're investing in a company that is going bankrupt. Anyways, guys, this wraps up the first section of this series. I hope you guys enjoyed it. Please leave me your feedback in the comment section below, and I will see you in the next video. If you are interested in learning more about investing in the stock market, I've created a free course just for you. The link is in the description below. Here are a few other videos you might enjoy as well.